Hey everyone, me Kevin here. Could we see a double dip recession? In this video, we are going to react to what a chief economist over in Europe has to say about our Federal Reserve, the European economy, and what this has to do with the United States economy. And folks, this is fascinating, especially since we know we are coming up upon some major fiscal cliffs. We know that the United States budget ends on December 11th. So if we hit another cliff there, great, the government shuts down. Then on December 31st, we lose unemployment pay for self-employed workers, the CDC eviction moratorium, the ban on evictions, and student loan deferrals end. So we've got huge things happening in the next couple months here in November and December. The Federal Reserve meets 2 more times. The Federal Reserve meets this Wednesday and Thursday. We'll probably get a press conference on Thursday, so that's the 4th and 5th. It's their second to last meeting before the 15th and the 16th. And folks, all eyes are on the Fed. But I have to say, that currently Raphael Bostic says it best at the Fed. On October 19th, he tells me the reality is that it will be some time before we tighten our interest rate stance or pull back strongly from our actions supporting financial functioning. AKA, the Federal Reserve is ready to help. But what I'm about to play casts a little bit of doubt on that and also gives us some perspective on when should we actually go shopping for some stocks. Let's go ahead and see exactly what this individual says. And he is going to start out by playing market psychiatrist. So he is going to talk to the market, and then we'll watch the rest together. I saw that and I'm like, that's it, I've got to share this. So let's get on it together and we'll add commentary as necessary.
We've got Allianz Chief Economic Advisor Mohamed El-Erian joining us live right now. Mohamed, thank you for getting in the chair. Do me a favor, play the role of shrink for the markets at this very moment. What is going through the minds of the markets as we head into this Friday?
So I would say I understand why you're upset. You've had the worst week since March. You've had a second month of losses. And you know what? Your bonds have sold off as well this month. So this is a tough time. The investors will feel they're getting hit from all sides, and even your favorite names are nursing big losses. So I understand why you're upset. I understand why you're hurting. You need to understand why this is happening, and you need to maneuver accordingly.
Yep. In other words, right now, there is no safe haven. Stocks are getting whacked. Bonds are getting whacked. The only thing not getting whacked right now is Bitcoin. But that's for a different video.
Dr. El-Erian, I'm laughing because we're anthropomorphizing. I mean, we're putting a human face on the markets, but all of our viewers really feel this very closely at the moment. And specifically, when we look at the tech wreck, you see that as a real bump in the road. First, can you give us a roadmap of what you expect in the next couple of weeks? And are these opportunities? Because Apple right now is certainly losing some steam over the past week, but you wouldn't be buying it at the highs we saw last week.
Right. So we had 3 very big drivers to this market. Improving economy. We were coming back strongly, as you saw from the third quarter GDP numbers. Policy stimulus, and investors confident that the central banks would support us, that the Fed would support us. The fundamentals are no longer improving as fast because of COVID. Stimulus is not going to happen. Maybe the earliest it'll happen is early next year. Wow. So investors are relying on just one thing, liquidity conditioning. And what happened this week, and the reason why tech got hit hard, is for the first time, tech started warning about.
And that is true. Tech did start warning. You had Apple not provide guidance. You had, and I know this is not tech, but just as an example, because Chipotle usually rallies when the COVID gets worse with their Chipotlanes. But anyway, when you have the CEO coming out going, we're having to shut down a lot of stores because too many of our employees have COVID, you got problems, especially when we're about to cross the 100,000 case per day milestone. This is not good. We're going in the wrong direction so far, at least with cases, right? At least deaths are down. We know that, but it's not good. And the stock market is reacting. So let's see what else we hear.
What's ahead? Even tech can get whacked by what's going on. So I think this is a repricing. I tell people, if you are in names that you understand and you like, stay there. Mm-hmm. If you're eager to buy, wait a little bit. let this play out. We still have a few more days of real uncertainty, not just the election. I'm actually worried less about the election. I'm more worried.
I'm gonna pause there. That's actually really interesting. I've been trickling in a little bit this week, like Monday, Wednesday, Thursday, a little bit last week, a little bit when Trump got COVID, right, at the beginning of October here. So there have been some opportunities to kind of trickle in. Obviously, though, the market has continued to go down. I've been thinking we're probably gonna have peak fear before the election. But then again, the problem is, I don't think any of us were expecting to get COVID. I saw COVID cases coming, as in this rise coming, because we talked about search trends on this channel 3 weeks ago, how COVID symptom search trends were increasing. So we saw that coming, but I don't think any of us saw that, oh yeah, hey, in 3 weeks, we're gonna go from 50 or 40,000 cases a day to 100,000 cases a day. I mean, we could potentially hit exponential growth here. This is very bad. And we'll see what he says. Let's keep going on here. But yeah, I mean, I certainly keep some cash around for after the election as well. But what else does he mean here?
About the Federal Reserve meeting next week, and what are they going to tell us something significant? So
Really?
Wait a little bit, because my gut feeling tells me, Liz, you're going to pick up good names at better prices.
I agree. I think we're on this downtrend right now, right? It's trickling in is painful to do when it's red. Not wrong about that. I'm fascinated, though, that he's actually suggesting that the Federal Reserve's meeting next week might be a catalyst for bringing stocks down. That doesn't make sense to me, because the Federal Reserve, this entire pandemic, has said they will do whatever it takes. They will stop at nothing to bring their toolbox out, and they'll put the toolbox away when they need to. Let's see what he means by that.
Down the road.
Why are you worried about the Fed, Mohammed? Now, we want everybody to know that the Fed meeting is November 4th to 5th. It's that 2-day meeting. And what is disconcerting about that for you? Are they going to reveal what they see?
Well, they need to do something, because the marketplace has been conditioned that the minute it sells off, the Fed comes in and increasing liquidity. We already saw the ECB, the European Central Bank, this week. They reacted by saying, we are going to do more, and nothing is off the table. They talked about
But hey, in fairness, Christine Lagarde, the leader of the ECB, the European Central Bank, they hinted at December doing something. Nothing for October, nothing for November. They hinted at December. But Europe's having harder problems than we are, right? At least right now. You know, people are suggesting that Europe is just a few weeks ahead of us. It's not good.
calibrating. That's the word that our friend, the president of the ECB, Madame Lagarde, used, recalibrating. So US investors will expect the Fed to say something, but the Fed is in a really difficult position. So if the Fed doesn't say something comforting, then this market will take another leg down.
Wow. I expect the Fed to say something comforting. What I think will be more of a catalyst, honestly, is COVID cases. This is a nightmare. I mean, it's very bad.
What about bonds? Can you give us that roadmap for treasuries?
And that's the irony, that in a month in which stocks have gone down and people had 60, 40 or 70, 30, 70 stocks, 30 bond, they look to that bond allocation and say, well, that at least made me money in a world in which risky assets went down. Surely risk-free asset went up. And the answer is they did not. They also lost money. And it tells you that we are coming to the point where bonds have been so distorted by central bank action that they no longer behave in the way investors want them to behave. So the only risk mitigator in this world today is cash.
Wow. Yep.
Huh. This is fascinating to me, cash, because you anticipate maybe there will be better entry points in this. And as we finish up, can you just give me a sense, because the least worst sector right now is materials, then financials, and then industrials. So putting aside financials for the moment, materials and industrials, do you feel that that's an opportunity at the moment?
Not yet, unfortunately. The global economy is slowing. Europe is going to enter possibly a double-dip recession. Things are shutting down in Europe, and China can't carry the global economy on its own. So no, I would say I would wait and enter tech companies at better levels.
Wow, he's including tech too. Yeah, I mean, you know what? He's not wrong. And I personally, I'm basing my interests on COVID. COVID it's going to get worse and worse and worse. Now, There are many theories that say, well, Kevin, then if you think it's going to get so much worse, why don't you put your money where your mouth is, sell everything, and then just rebuy when it's lower? And the big reason as to why I don't is the selling psychology. As soon as I sell, I'm be nervous to buy back in, because then I'm going to be pissed that I didn't buy in on a certain day versus another. So I think my goals now are use potentially the margin that I have paid off or new cash that comes in from income and just add to these positions on discounts. But there's a good chance we're going to see discounts for the next couple months. And I wouldn't be surprised if we trade. I wouldn't be surprised if we see like a big green Monday and then, a green Tuesday on election day and maybe a red Wednesday. Who knows? Like, it wouldn't surprise me if we see this sort of teeter-totter, but averaging lower, at least until uncertainty is removed. And remember the uncertainty elements that we have right now. COVID is the big one. The contested election, it's there, but I think a lot of that uncertainty will go away after the election. I think a lot of the uncertainty regarding who's going to control the Senate and the House, that'll go away after the election. The big question mark here is COVID. And this is one of the reasons I like buying COVID stocks in some of this weakness now, because technology is what is ultimately going to succeed through the continuation of the pandemic. And I don't think we're going to see that same panic we saw in March and April. But who knows? Batten down the hatches, folks. We got some craziness coming up. Get your life insurance in as little as 5 minutes. Get your 3 free stocks when you deposit $100. If you appreciated this sort of commentary and analysis, please feel free to share, like, and subscribe. You can also check out the gaming channel. I'll be posting some highlights of a live stream I did earlier. And folks, we'll see you next time.